Well, it's now time to bring you part one of our interview segment on the show today. Now, in an effort to stimulate the flow of credit to the real sector of the economy in order to reverse the nation's over-reliance on imports, the Central Bank of Nigeria introduced a financial instrument called the 100 for 100 policy for production and productivity. And according to the Apex Bank, the initiative is designed to create the flow of finance and investments to enterprises and also looking at potential to catalyze sustainable economic growth trajectory, accelerate structural transformation, promote diversification and also improve productivity in the country. In recent times, access to credit in the private sector has grown significantly, hitting an all-time high of 33.8 trillion naira as of the month of September this year. Well, let's now discuss the impact of this policy and much more from the CBN. I have joining me in our Lagos studio the founder of MSME Africa, Seye, Olurotimi. Good to have you on the show this afternoon.
Good afternoon, and thank you for having me today.
Now, let's look at this 100 for 100 policy now, the framework, the thought of this initiative. Now, this is expected to select 100 enterprises in 100 days,
yes,
and also give loans. But one would also say, as much as this is a commendable effort, the biggest question we have at hand right now is how do we see implementation take shape, especially for the timeline of 100 days before the next rollout?
Exactly. I mean, laudable initiative, but like everybody always express, it's not just about having a good initiative, it's about implementation. But we shouldn't take away the credit from CBN for coming up with this. I think it's quite commendable. The fact that you are thinking about the private sector and you're saying you can get as much as 5 billion naira, and then you're looking at giving that to 100 organizations within a period of 100 days, you start another batch. I don't know how many tranches we're talking about, but the good thing is that this is happening, and that's 500 billion, right, in 100 days. So if you have that, let's say we have 4 tranches, for instance, that's talking about 2 trillion. That's commendable, but the issue had always been implementation. Are we going to be sure that this is going to happen and it's going to get to the right hands? That's a question that is begging for a lot of answers. So I want to believe, I've not seen seen a lot of details around the implementation, but I believe it's a laudable one. But I'm saying, what are the frameworks? What are the requirements? Is this going to trickle down to the MSME sector, or is just the big ticket players that are going to get it? Because the MSMEs are actually the ones that need this a lot more than other people. They are over 41.5 million in number, contributing close to 50% of the GDP, and responsible for close to 80% of employment. So I think they should have a large chunk of these. And then, so when you're implementing, you don't start asking them for things they cannot produce, because they are playing at a level where they might probably not be able to come up with some documentation. So I want to hope that all of this has been factored into the implementation so that this is easily accessible to these guys and they can easily use it for what they are meant to use it for. And I hope we are monitoring it so that it actually is used for production within the country and not for anything else.
And talking about looking at monitoring now, we also have to look at the scope of funding now. The maximum loan amount, according to the CBN, is 5 billion naira
5 billion
for
naira.
the 100-day period for those selected within this period. But the question is, how sustainable is this looking at this volume?
Yes, so like I just did some quick mathematics. So let's say each one, the maximum you can get is 5 billion. Some will not be able to get up to that. I'm sure they'll look at your books and some other parameters. But let's say we have the maximum, 5 billion times 100, that's 500 billion. So if you do 4 tranches, that's 2 trillion, right? So that's a lot. And so like you said, how sustainable is this? I want to believe that if the ones that get the fund pay it back, it becomes sustainable. So it's like a rolling thing. So you get it, you pay it back, and then the other person can get it. But it becomes a problem when people are not paying it back. So, and the interest rate is 5%, which is quite very friendly. So I want to believe that when people pay back what they get, then of course the impact on the economy will ensure that we have, it deepens the economy, and then when they pay it back, the other set can also get from the pool.
And taking on just the rate of interest that you made mention of right now, so come next year, by February 2022, we are still going to see the 5% interest rate stay. Then by March, we'll have it goes to 9%. Now, when you're looking at this in comparative analysis to what we see in commercial banks, would you say this is fair enough?
Very fair. I mean, 9%, single digits. You won't see anything less than that. You would probably see times 2 of that.
Some would have asked for a slimmer rate.
Oh, well, but of course, if it's slimmer, that could also have some form of impact on who is bringing out the fund. I think 5% is just fine. It's just fine. I think it's fine.
Now, we also have the CBN also priding itself in the non-performing loan rates we've seen in the country right now. The economy is still gradually taking its footing, recovering from the COVID-19 pandemic, especially for sectors around emerging sectors of the economy. How do you also see things playing out, especially as we see in the selection process? What would you like to see as a perfect scenario? So in the selection of the 100, would you like to see those from agric, those from manufacturing, and a whole lot more? What sort of ratio or categorization would you like to see? Okay,
so like I said, MSME is my own constituency.
Take into consideration processing, value addition, and a whole lot more.
So the policy says they're looking at agriculture, manufacturing, renewable energy, I think healthcare. So I think if I'm the one who has all the authority to decide, I think like 20% at least should go to agriculture. Because you know what is happening in that sector, and that's a sector we can actually fall back on, right? So agriculture should probably take a large chunk, maybe 20%. Then the other 80% goes to manufacturing, goes to extractive industry, goes to healthcare and renewable energy, and then the other sectors. But of course, I'm also saying that even whatever sector you are giving this to, they should be the micro, small, and medium players. Don't go give the loan to guys who have
bigger corporates that have the structure.
But that's always the problem, right? So don't go give it to them. Give it to these small guys, the guys who are doing smaller volume. Let them be able to trade and do stuff with it. And it's been found out that these guys are even less prone to default. The guy that has been used to collecting loans in billions and trillions and nothing happens has the effrontery to always go back, right? But these smaller guys, they're always afraid that somebody's going to start chasing me for 5 million, 10 million. So they pay back a lot more than these other guys. So let it get to these smaller players so that it can actually be fair to everyone concerned.
And you think this ratio is also going to help in the diversification agenda of the economy? And for those who also question, we're looking at the changing face of business now, the ease of doing business, taking into consideration all of the inflationary pressure and a whole lot more that business are doing. What do you think are some of the criteria that businesses today now have to take in consideration to favorably position themselves for such initiatives or grants or loans that would help give them a level up?
Okay, so for you to be rightly positioned for grants and loan and other interventions, your books have to be in order. That's always the number one thing. So you are trying to get a loan, you are trying to get some funding, you are trying to get a grant, or you are trying to get investors, venture capitalists or angel investors. The first thing they are going to ask for is your book. They want to see what's in your, what have you been doing? All right, they want to see your financial discipline. They want to see your figures. How much did you do last year? How much have you done this year before I can now stake my money on you, right? Apart from that, they want to see the quality of your board. Who are the people taking decisions for you, right? Is it just you and your wife and you understand? So they want to see the quality of the people on your board. And I tell MSMEs, even if you don't have big names on your board, right, when you're registering with CSE, choose an advisory board. Call these guys that can actually call you to order when you're misbehaving in code, right? Or that can give you advices on how to run a business, because these are the things that people are looking for. They want to be sure that the people at the ends of affair will ensure that whatever fund you get will be judiciously used. So put your books in order, get a good board, then put structure in your business, right? That can run, so that your business can run even when you're not there. When all these things are noticed in your business, then you are more attractive to funding. And of course, drive your business with technology.
Driving your business with technology. We still are yet to have the full breakdown of how this will play out. The initiative started on the 1st of this month.
November, yeah.
So this should run for a quarter. Now, whether or not the tenure, we are not yet clear on the tenure of the repayment of the loan. We are not necessarily certain about those details. But for the aims of economic growth trajectory, looking at reducing imports, accelerating structural transformation, promoting diversification, improving productivity, and a whole lot more. How would you say infrastructure development is key to ensuring that these MSMEs or these businesses, whether startups or not, or even big corporates, can deliver on the mandate given the support with the current infrastructure challenges we have in hand? Take, for example, those within logistics. It's a difficult problem. Take those in manufacturing. Power is an issue. Take those in agriculture. We have a whole lot more to do in the value chain. How difficult do you think it would be for us to materialize or reach this goal with the current infrastructure deficit?
So I was driving down to the studio. I was thinking, ruminating about this policy, and I said, this is good. But thinking about infrastructure, and I mean, I had to just step back in my thinking and say, this is going to be a lot of problem, right?
We shouldn't be too optimistic.
We shouldn't, because infrastructure is a big deal. Okay, so you give me money for agriculture, but I can't move my product from point A to point B because of logistics problem, because of bad roads. Then even electricity, right? Storage, I can't store. And that's why you see a lot of foodstuff in a particular season, they are available and they are wasting away. Then the following month or the following quarter, they are not available and the price has almost doubled or tripled. Because our storage, it's a big problem, right? So infrastructure, logistics is something that government has to look into seriously. What about electricity? The survey from PwC in 2020 says that 21% of cost to small businesses goes into electricity, whether it's from the discos or from generating set or whatever. 21% of your cost goes into electricity. That's a problem. So that means you are already at a disadvantage compared to your contemporaries in other climes who don't have to grapple with electricity, with bad roads, and some other things. So when these interventions come, but I'm still doing business where the infrastructure is a problem, where I have logistics problem, then it might actually draw us back instead of pushing us forward. So we need to fix infrastructure as much as possible.
And then lastly, just before I let you go now, let's look at the potential of job creation now. We had furloughs, we had companies going bankrupt, we had people laying off staff. Now, to what extent do you think this initiative will create a bigger pool for recepting or having much more applicants or job creation opportunities, really? Okay,
so it's general. It's a no-brainer. When you pump money into the economy, you create jobs, especially on capital projects. You create jobs, right?
But so many are looking at rather cost-cutting measures. How do we slim down the budget and still maintain a human resource base that can almost do double, triple the previous capacity of a single individual?
They are trying to see how they can supplement whatever human effort they have with
and working remotely
and what have you, working remotely and what have you. But with 5 billion, you would definitely scale what you're doing.
That's a maximum.
Yeah, that's the maximum. But you would scale. No matter what we're saying, this is money in the economy. It would trickle something, right? It might not even be direct employment, but it gets to someone's hand and they need to expand. They need to do more than what they are doing. And when people are doing more than what they are doing, it means employment. It means that you are deepening the economy, and it's just going to cause a ripple effect positively on everyone. So it will create a lot more job, I believe.
Okay, now lastly, let's also look at the fact that we are seeing recently we have hit an all-time high in terms of access to credit for the private sector for 3.8 trillion naira. This is a massive volume of funding going to the private sector now. But in terms of consolidating on such efforts like this, what mistakes do you think we can make that will take us back to the days where we can't hit the same figures?
Okay, so if we don't use the fund for what they are meant to be used for, we will just not get the result. Okay, so before this intervention, CBN came up with the LDR policy in 2019, loan to deposit ratio, that says that they pushed the LDR to 60% in 2019, right? I think it was the last quarter. But it was found out that some of these banks give the loan to some people who used to buy their own treasury bills. So it's not coming to the economy. It's just like you are just doing it within. So if you don't channel it the right way or use it for the right thing, we are just going to lose whatever effect possibly this is meant to have. So we need to monitor. And that's one thing we keep talking about. We don't have good policies for monitoring and evaluation. We say we are disbursing this, we are disbursing that, we are coming up with interventions, but do we measure them? Do we measure the impact? The MSME Survivor Fund, what is the impact on the economy, right? All these policies, do we have do we think of measuring them to see whether they're actually doing what they should do? Where are the lapses? How can we fix them? Until we're able to measure the impact of the last intervention, right? We might just not know whether we are making sense of whatever we're doing, or we are just not making sense of it. So we need to measure.
So in the measurement of this impact, would you also be one of those that call for a steering committee?
Yeah, I think if it's necessary, we should do it. And then, of course, there's a lot more believability when the steering committee has a public sector, what's it called now? When you have a lot more people from the public sector, it's more believable. And that's what happened when they set up the MSME Survival Fund, and Mrs. Ibukwa Woshika was on that committee. It brought a lot more believability. So when you're setting up this kind of committee, bring people that people can actually vouch for. They can say, if this person is there, we can believe whatever result is coming. So don't mark your own script. Don't set an exam and mark your own script. Don't get public sector people to measure what you're doing, right? Get people from other sectors to come measure it and come up with something that everybody can believe and applaud.
Well, transparency is really key in
Very
the
key.
implementation of this. And then this is already the 1st of November. By the 100-day period, sometime in January, we're also going to see the first passage of that. And we'll keep our fingers crossed and possibly have you by then again to just do an evaluation before the next rollout begins. Thank you very much for your time.
Thank you for
on the
having
show
me here
today, Seye Olurotimi. It's been a pleasure speaking with you.
Thank you very much.